Amy, she took us live, so let everyone take a minute to get loaded in and then we will get started. Actually, I went to Saratoga to the races and it was like there was a bunch of weather on the East Coast and I was supposed to fly. So after two carriers and three canceled flights, and they were going to get me in at like on Saturday when I was trying to leave on Thursday, I just jumped in the car and drove. It's 9.5 hours.
Oh
Like
boy.
Wow.
Buffalo was my halfway point, and I'm like, yeah, I can't do
Yeah.
this.
That's a trip.
Jody, where do you live?
In southeastern Ohio.
Okay. Okay.
Mhm. Yeah,
Yeah.
I'm directly east of Columbus.
Okay.
Yeah.
It's a straight shot at least. It's a
Yeah.
boring
Mhm.
drive.
Yeah. Yes, very boring, very boring.
That's a
It
lot
was
of
good
90.
because I was during the day, like up until like business hours, I would just like jumped on meetings and made phone calls and then about 6 p.m. it's like, huh,
What do you know?
now what?
Podcast.
Exactly. I usually drive in silence because it gives me time to think.
Mhm.
Don't have a lot of time of like no airtime to think.
Yeah.
So we'll go ahead and get started. So welcome everyone to the SIP. I'm your host, Jody Hall, the CEO and the president of the Mortgage Collaborative. The SIP is more than just a show. It's a space for meaningful connection between lender members and partners. Think of grabbing a cup of coffee or an adult beverage with a friend and talking over the latest that has been happening and also helping each other solve problems. Today's episode is proudly sponsored by MQMR, the mortgage industry's trusted partner for audit risk and compliance. And representing MQMR is the one, the only, Mike Barone, the Executive Director of Compliance and General Counsel. And joining him from Genesee Regional Bank are Mike Pulver, SVP and Director of Business Development, and Joe Leone. Is it Leone or Leone?
Leone.
Leone, make sure I get that right, Group VP and Residential Mortgage Manager. Welcome to you all.
Thank you.
Thanks, Jody.
For sure. Very exciting episode as we go into conference. I actually first connected with MQMR years ago at a TMC conference, and since then I have used them and with the companies that I have been at, have consulted with, and continue to refer them today for audit and compliance support. I actually think that you may have saved one of my employees at one time, Michael Barone, for marketing, and the head of compliance were fighting back and forth about who was responsible for reviewing marketing flyers. And I was like, I know who is. So you broke up a fight, so thank you. But
Very
Mike,
nice.
let's get things kicked off with you. Can you introduce MQMR and share the key challenges that you help lenders solve?
Sure. So for those of you that don't know MQMR focuses on audit, risk, and compliance. I had the mortgage originations group. So me and my team assist lenders with all types of origination compliance. Could be advertising reviews, as Jody just mentioned, exams, LO comp. I mean, there's no shortage of questions. TRID, HMDA, keep going along the lines. Business purpose loans, where you have to be licensed, where you don't have to be licensed, prepay penalties, just, all down the lines, day by day, day-to-day issues that come up and questions. Some of the other groups at MQMR handle servicing compliance. I'm on the origination side. We have some people that handle servicing. We have an internal audit group, vendor management, servicing QC, fair lending, and probably some others I'm forgetting about.
The list goes on and on. It is quite the list, and you do a great job, and the entire team at MQMR does an amazing job for our lender members. Mike Pulver,
Thank you.
Genesee Regional Bank, is a proud community lender serving Western and Central New York, and yes, home to plenty of Buffalo Bills fans who are very excited with their big come from behind victory. Tell us a bit about your background and your role in the bank's mission.
Sure. Thanks, Jody. Again, as we've mentioned, Jody, I've been in the mortgage business for over 35 years. It's been a great run. Working for GRB has been a pleasure. Been here for 11 years, and as a community bank, we're really involved, in giving back to the community. But that being said, we are, from a business perspective, and Joe will share this as well. We basically are almost like an IMB within a bank. 95% of our business comes from realtors, so we have a very kind of traditional model per se. So even though we are a bank, we do get internal bank leads. Our whole model has been built around, developing relationships with realtors, builders, and again, we've been members with TMC now for, I think we're going in our 8th year, and it's been a great experience. So glad to be
Awesome.
here.
And thank you. And I tell everyone, mortgages, it doesn't matter where you come from, more from after the lead generation and that top of funnel lead, once you make it into the communication with the borrower, we still go from the very beginning point to the same end point, just alike. So it's a matter of doing that and doing it well. So happy to have you. And then Joe, the same to you. Give us a snapshot of your role and how you support residential lending at GRB.
Yeah. So I've been with the bank for 8 years now. I am the residential mortgage manager. So I oversee processing, underwriting, closing, post-closing sales, kind of everything rolls up through me. And prior to this, I was the mortgage operations manager before taking on the residential mortgage manager role. So a little bit more heavily involved on the ops side. But I am glad to be going back to Boston, which is actually where I started my career in the mortgage business back in 03, when I didn't know there was a T in mortgage when I started, but lo and behold, here we are today.
None of us did, and some of us still don't. Joe, we'll stay with you. Let's talk partnership. When did GRB begin working with MQMR?
So we started working with MQR actually on the servicing side before we started on the origination side. And about a year or two into our, I think it was 4 or 5 years ago, we were using them for MERS audits, a little bit of sub-servicing oversight, and then we got introduced to Mike. I believe it was at one of the conferences where him and I first chatted and said, you know what, there's some space here that we can get engaged with you guys on, where, I'm a push the envelope kind of guy, which is hard to do with your internal compliance, but it's easier if you've had some of the conversations with the external compliance first, which Mike is great at, just brainstorming a lot of, right? We talk about ideas. Hey, what do you think about this? And what do you think about that? And that's helped tremendously gain some inroads with our internal compliance as well.
A true partnership. Mike Barone. So this is the first time I've had the same for two people with the same first name. So we'll try to keep this straight. But Mike Barone, can you walk us through some of the areas where MQMR has supported GRB over the years, in addition to servicing?
Sure. So I happen to have one of those popular names, at least in popular way back when. So we have multiple Mikes even internally at MQMR. So we usually go by our last names. I think some people think my name is Barone, to be honest, when they talk to me. As Joe said, a lot of what I've dealt with the bank with Genesee has been business matters. So a lot of times my clients are asking more technical questions. What do I do on this particular TRID matter? The broker did this, my loan officer did this, what do I do? More so with the bank has been business type things. I think, Mike mentioned 95% of the deals come from realtors. I think when a NAR settlement came about, it was a big shakeup in a lot of people's worlds. Anyone who's really reliant upon realtors really needed some help, and the realtors were looking at the lenders for help. So lenders were in tune looking for compliance assistance, because it was a little bit different than just a mortgage issue. It really was a realtor issue, but it carved right into and bled right into our industry. So I remember that was one area we went in. I know that they've spoken about some MSAs, and we've talked through that. We've talked through some SEMA items with New York, one of the nuances in New York, and they have a couple of unique programs also, which we've talked through. Some programs with respect to down payments and guarantees and so forth, which we've talked through and had to waddle through some challenges there. So a lot of business type things here, but again, it's more the norm, quite honestly, that questions we get, issues we get are more directly legal or compliance related, LO comp problems, investor issue, compliance engine issue, those types of things.
Yeah, and I will say one of the areas besides the marketing flyers that that I have either used or directed MQMR to use and is really important today is state compliance. So with the the CFPB not providing enforcement and the states trying to come up with their own enforcements, people often ask me, who do I go to for state compliance issues? And the answer is always MQMR. But Mike Pulver, what has your experience been like working with MQMR over the years?
Sure. So, I'll pick up on Joe's point. One of the things, and I'm sure, Jody, you've heard this throughout some of the lab groups, but, part of the challenge that, we at the community bank level have to do is we have to do a good job of managing up. Most of the folks that Joe and I report up to have been groomed. They're, for the most part, commercial bankers, and they got into mortgage lending. So TMC has served a great role in helping us educate them. So for instance, when we roll out a new product, a new program, there were some programs that actually Joe led, where we had to roll out what we call like this cash guarantee program that really got some internal pushback. So, Joe, to his credit, reached out to Mike and kind of framed up how we wanted to roll out this program. And we leaned on Mike and MQMR to provide us with guidance on how to do it, the language within these agreements, so that we could go back to our internal compliance team, including the CEO, and say, hey, listen, we did our homework. This is how they suggest we do this compliantly. We still had to get it blessed from an internal perspective. But I think the way that we've been able to use them and it's been really helpful, is to get that third party outside of GRB counsel, so that it just doesn't appear like Joe and I are going off on a flyer, that we're vetting this out. We're getting that, we care about compliance. And I think, Mike and his team have done a great job from helping us navigate through some pretty cutting edge programs that were pushing the envelope, to steal Joe's.
One issue, and Mike hit on it well, that comes up a lot, is, a bank, the compliance side of a bank, and it's not 100%, but it's more so than not, is not always so familiar with mortgage, right? And I'm not talking down on them, because I'm on a mortgage origination compliance side. I don't know anything about car loans. I don't know anything about depository rules, right? So it's although you call it a bank compliance officer, it's really two different worlds, the depository side and the mortgage side. And they don't overlap at all, right? The laws don't overlap. The rationale doesn't overlap. They don't deal with loan officers over there, which is a complete different, angle. So it's a real big difference, a real big thing when a bank is on mortgage, trying to help the compliance people at the bank understand mortgage. And that's what that's part of the role I fulfill here, is to not having sales roll up right to compliance, tell them it's okay. There's another compliance mind in there from the mortgage side, which can speak to the compliance on the bank side and sort of, make them a little more comfortable. So that's something that comes up a lot with banks and credit unions.
Yeah, absolutely. I've seen it on the credit union side a significant amount as well. I love it. So Michael Barone is the savior for Joe and Michael Pulver going rogue. That's your buffer. Now let's pivot to an ever-evolving world of compliance. We talked a little bit about the changes in the state compliance, but there's a lot happening. So let's unpack that a little bit. So Barone, can you start off with some of the new laws lenders should be paying attention to?
Yes, there's not a lot going on the federal side. When I say the federal side coming down from the CFPB, I think that's everybody has followed that along. We did just get on the federal side, we did just get the trigger lead legislation, which a lot of people have been calling for a long time, and it's finally gone through. The president signed it. I think the effective date is March 5th. It was 180 days from when it was signed. I think it's March 5th at 26th. But trigger leads are basically not going to be permitted absent unless you're the originator, the servicer, or if you're a bank or a credit union, you have an account with that individual. So the idea of, someone taking an application, running credit, and then that consumer gets, 50 calls in the next 3 days and is really mad at that loan officer that took the application, right? That whole situation will be going away. I think it's really gotten out of hand and will be going away, and it's a good thing. And I think most lenders are happy about that. I think some lenders were involved with trigger leads just because they had to be. Like, you can't beat them, join them type of thing. Their leads were being taken by others, so I'm going to jump in and take others' leads to make up for those units. So it really was going around in circle, and it was the consumers were really held hostage and were really annoyed by this. So that's going to be gone. It was a 6-month wind up. So you have until I think March 5th or March 6th until that's effective, but then those should be going away. I know there was some things in the New York legislative session, which I wanted to let Mike Pulver talk about. One of them deals with AI, and while you may not be licensed in New York or care necessarily about New York in your particular shop, these ideas flow over into other states. So when you talk about AI in New York, an AI bill that really was dangerous AI bill that's floating around, it's the same type of rationale that's going to go into other states. Maybe not every state, but once New York or California generally pass a bill, there are others that look at it, right, and latch on many times. So, Mike, I don't know if you can spend a minute or two on those
Sure.
things there.
Yeah, so honestly, it's to your point, Mike, it's just floating around. So just, Jody, I know I've mentioned this to you, but I'm currently the president of the New York Mortgage Bankers at Terms, coming to an end here soon. But, one of the things that's been floated is that there's this perception by certain Congress folks that are in the state Senate that feel that the AI that's being used, DULP, AUS, has embedded fair lending issues, or it discriminates. So they want to allow a non-AI decision to be made if the AI that's being deployed is not rendering a favorable outcome. So that's just riddled with concerns. So it's floating around. We at the New York NBA, we have a lobby firm that we've hired that helps us either advocate for or against bills, and obviously we're advocating against this. I don't think that it's going to ultimately make it through in the form that it is today, but these things do get modified, tweaked, and so on. So it's out there. Certainly from the New York State, I'll keep you guys posted on what I learn, but it is of concern, and I think that we need to monitor and continue to pay close attention to it.
And the Mortgage Collaborative has an advocacy committee, and we've been talking about the need to go to the states with the changes that are happening or not happening federally, that the states are going to have more impact. And that's definitely an area. I'll call out Sarah Gonzalez, who heads up that committee, to make sure that that's something that we have on the radar to discuss, because it's going to make it so investors won't touch if you don't have an approved, eligible, or an accept loan, they're not going to touch them. So it's going to be the opposite impact of what they're trying to accomplish.
Correct.
So very scary. Agree. Jeremy Davis jumped in there in the chat. So Joe, staying on top of these changes is just astronomical, and it's also kind of scary because you don't know what you don't know. How do you and your team stay informed and adapt to the shifting regulatory landscape that we're seeing today?
Yeah, I think, it's, you said it right best, adapt, right? I mean, so much of what we do is reactionary, right? And if you think back a couple of years ago when we had the issue with the buybacks, right? It was, well, appraisals are the hot button. So we all reacted and we all shifted what we were doing and how we were doing it. And just trying to, use resources like Mike and MQMR. I mean, we have a monthly call where we sit with him and he kind of highlights what he's seen from his seat and then shares it out via email as well. The networks, the mortgage blogs, right? I mean, Rob Chrisman's a great resource with his blog, and just keeping up with those resources, because it's things that it's a quick read, but you catch those bits and pieces in there of, oh, you know what, I didn't think about that. And we've seen it, from the ROV to the updated URAR, so much of the stuff gets pushed back where you catch it when it first comes out and then you don't hear about it for 2 years. And so then, oh, yep, that's a hot button. We got to do that again. So just trying to subscribe to all the different things that we can to just get those bits and pieces of information. And, the TMC network's a great, when we're at these collab labs, right? So much of it happens naturally where we're just talking about, is anybody doing anything with this or that? And the ideas and oh, I didn't think about that come to mind when you're realizing that you're a little bit more sane than you thought you were.
Yeah, don't be afraid to step up and say that you've been penalized for something. You can help save your other TMC lender members from having the same penalties. So definitely a great place to share. And then
Jody, I just want to mention 2 other quick statutes that maybe might be mindful.
Yeah, for sure.
They're in very popular states, lender states. Texas, as of 9/1, they have Senate Bill 17 was signed into law, which prohibits the acquisition of real property in Texas by certain individuals unless there's an exemption from the act. So individuals or entities associated with China, Russia, Iran, or North Korea. I think Iran, North Korea, and Russia do not present challenges because they're already in the OFAC restricted list. So you're really dealing with Chinese residents and so forth. So just be aware of that. It's not the same, but it's got similar characteristics of the law that was enacted in Florida a few years back. I think there's one in Oklahoma. So just be aware of that. And there's also a Maryland law, which is effective on October 1st this year, which makes mandatory assumptions regardless of what the loan documents say in a divorce proceeding. So following a divorce proceeding, one of the spouses is going to maintain the home. It's a mandatory assumption that loan becomes assumable with the lender. Now the spouse that's going to remain in the property and be on the loan has to qualify, but you cannot tell them that the loan is not assumable. If they qualify as a result of a divorce, it's a mandatory assumption right. So that's even on a conventional loan, which are usually not assumable. That's effective 10/1. Fannie's already changed their note, actually, their note form in Maryland to accompany that. But I just wanted to mention those 2 because Maryland and Texas are 2 popular states for lenders.
So that is approved, like where the lenders need to make sure at what date that they need to make sure that those notes are assumable.
10/1, you have to start with a disclosure.
Okay.
And it's actually retroactive. So any existing mortgage now is automatically assumable again in the divorce context. Following a divorce, if one spouse qualifies, they have the right to an assumption, even prior to the 10/1 effective date. Very limited, again, it has to be in connection with the divorce and where the spouse qualifies. So it's a limited window, but there is a little bit of window there.
All right, awesome. And Mike Pulver, let's talk agencies. What's your take on conservatorship? Where do you think things are headed and when we might have some answers?
That's a big one, Jody.
If anyone can answer it, it's you.
Yeah, I know. I mean, yeah, I think you know probably as well as anyone. I mean, this is a mouthful, and should not be taken lightly. Obviously, when you think about the pros of doing this, obviously you would think it might be able to restore some lost shareholder value, which is, part of the reason for, doing this. But in the same vein, I think it's important that this needs to be very deliberate, and really to ensure that, that we don't lose sight of the fact that, these securities and ultimately the rates that people pay are in part where they are because of the, the guarantee that we get from the government. So I think they're just, again, I've chatted briefly with folks, about this, and in my 2 cents worth on this, do I think it's going to happen? I do. That being said, I'm not convinced it's going to be during this current administration. I think they might start it. I don't know that they'll necessarily finish it, which that could certainly modify things when administrations change. But certainly, I think there's been enough learned since 2008 and enough reforms that have been put in place that, mortgage lending is a much safer, business per se. We just have to ensure that it doesn't impact, the credit quality, that doesn't impact helping low to moderate income borrowers, affordable lending. I think there's a lot there that needs consideration. So do I think it's going to happen? Yes, but I think it's going to take some time.
Yeah.
As it should.
Yeah, there's a lot for us to worry about between now and that point. So we will focus on that. And Mike, there have been some notable updates from the agencies. Can you share a few of those, and then we'll let Joe react to those?
Sure. I think recently Fannie updated both their QC requirements and their IT requirements. I think the IT requirements, the general feeling is most of those are being done by lenders already. And they were just best practices that were put into play, but they were put into writing. So not much there. QC2, they redid the whole guide because it hadn't been updated in a while, and they had made additions to it. It was a little disjointed, so it appears to be more changes than they have made. It's just the whole section in the guide is all revised. It's just the same items and just being revised a little bit. What's a little bit annoying with the agencies and HUD is that they're coming out with inconsistent rules, right? You had the ROV, the request for reconsideration of value, the disclosure. They came in together, right? You had to do a disclosure with your early disclosures, the disclosure when you deliver the appraisal. Now HUD, took it away. The agencies left it in. Now they took it away from the initial disclosures, right? So you have inconsistencies there. You have the same thing on a supplemental consumer information form. HUD says it's no longer required. That's the form with the language preference. The agencies still require it. So, they think you're doing you a favor by taking it out, but you're really just getting half of it. And they're setting lenders up to screw it up, right? You take out your reconsideration of value form from a FHA deal, and now midway that changes to an agency deal, right? Anyone going to remember to stick that ROV form into that agency disclosure pack? Probably not, right? So everyone's got to leave it in for everything, in my view, right? You can't start taking it out of some programs. You're going to wind up being sorry, I think. So, giving it to you halfway doesn't really hurt you. It actually doesn't really help you. It actually hurts you. Some lender somewhere is not going to be able to sell a loan because they don't have an ROE form on an agency deal because they took it out because HUD told them to take it out, right? So
and then they had a loan program change, and they forgot to shove it back in there.
For what? It just seems that the inconsistencies, whether it's the agencies and HUD or it's the state to state, just, I see causing lenders more and more chaos by the day.
And Joe, is GRB, how are you navigating these changes? What's working to help with your production?
Yeah, I think, to Mike's point on the ROV stuff, we just left it in for everything, right? And regardless of the type of loan, we're just going to follow it and get it in and get it out there, and just try to do what we can to not have unsaleable files. Because and you think about how many boxes we check on every single loan, right? And it's easy to forget one thing here and one thing there, and all of a sudden you got a problem on your hands. And we try not to let it get in the way of doing business, and we've tried, we've built efficiencies and stops in place to make sure that things get caught, and because we're all human. So the more we can leverage technology to help us not miss things, the better off we all are.
And loan officers wonder why the initial disclosure package is 87 pages long.
Right. Or the cost to originate is so high on
Yeah.
on the other side of things,
Just
right?
leave it in, just in case. Well, gentlemen, that is a wrap. A huge thank you to MQMR for sponsoring today's episode, and to Mike, and Joe for sharing your insights and expertise in the industry. We will not be back next Tuesday live, or next Tuesday virtually. We have a live session that only can be consumed by the attendees of the TMC summer conference in Boston. Cheers, where everyone knows your name. We will be back here virtually on Tuesday, September the 23rd at 2 p.m. Eastern Time, and on LinkedIn Live at 4 p.m. Eastern on the 26th. So until Boston, Mike Barone, we will miss you. Safe travels to Joe and Mike Pulver. We'll see you there. And cheers,
Thanks,
everyone.
Jody. Thank you very much.
Okay, thanks, guys.
Go Bills.
Yeah,
Bye.
okay, yeah.